Good day, viewers. Today we want to look at petroleum profit tax. And we're looking at petroleum income. So under the petroleum income, there are components that makes up the petroleum income, which are value of chargeable oil disposed, value of chargeable oil sold, value of natural gas sold, and the miscellaneous income or sovereign income. We're going to pick the value of chargeable oil disposed today. Now, to compute for the value of chargeable oil disposed, you must know the components that makes up the value of chargeable oil disposed, which include the royalty. And the royalty is computed by using the posted price to multiply the number of barrels of oil delivered to the refinery. So number of barrels of oil. Then you also look at the transportation costs. Transportation costs, which is also the cost of transport per barrel multiplied by the number of barrels that was delivered through the pipeline. Then finally, we also look at the maintenance costs. Based on the fact that the pipeline, volumes of barrels will pass through the pipeline, we're going to apportion the cost of the pipeline or the refinery. So to do that, we're going to say volume delivered all over volume deliverable multiplied by the total cost. By the time you do this and add up, you obtain the value of chargeable oil disposed. So let's take a look at this question right in the board. It said, Chris Brent Oil Limited produces 100 barrels of crude oil per day per year. 80% of the crude oil produced is sold onto the export market at a posted price of $5 per barrel. The posted price in the local market was $2 per barrel. The company delivered 10 barrels to the refinery out of the volume available in the local market. The refinery has a capacity of 50 million barrels. Was completed at the cost of $100 million with a depreciation of $5 million per annum. The cash cost of maintenance was $2 million for the year. It was reported that the cost of transportation through the pipeline is $3 per barrel required. Compute the value of chargeable oil disposed. So the value of chargeable oil disposed, the first thing we're going to do is to get the royalty. And the royalty is the number of barrels delivered to the refinery. And if you look at the question, we produce 100 barrels of crude oil, and 80% was sold to the export market. And out of the 80%, 20% is remaining for the local market. But out of the local market now, how many was delivered to the refinery? We were told that 10 barrels were delivered to the refinery. So we're going to say 10 barrels multiplied by the posted price. And the posted price for the export market, that is what we must use. The posted price for the export market is $5 per barrel. So multiply by 5, that will give us 50. Then we'll have the transport. The cost of transportation through the pipeline was given to us as $3 per barrel. So we're going to say, okay, 10 barrels times 3, that gives us 30. Then the leftover is the maintenance. So for the maintenance, we're going to look at the volume delivered, which is the volume that passed through the pipeline. That is 10 barrels. All over the volume deliverable. Because they told us the refinery has a capacity of how many million? 50 million barrels. So divide by 50. multiply by the total cost of maintenance. So the total cost of maintenance will include the cash cost plus non-cash cost. Now the cash cost here was given to us to be 2 million. While the non-cash cost is the depreciation, which was given as 5 million. So 2 million plus 5 million will give us 7 million. Then 10 divided by 50 times 7 will give us 1.4. So by the time we add this, we have 81.4. This becomes the value of chargeable oil disposed, which is part of the what? The petroleum income. So thank you very much. Please do subscribe to the YouTube channel so that you can be getting more of this video. Thank you very much.